Hi, and welcome to Real Men of Real Estate. I'm your host, Steve Matley, president of Coast to Coast Equities. Today, we're going to talk about the real estate market, now specifically the Southern California and San Diego real estate market, but it does transcend to other areas. And we're going to talk about whether there's a bubble on the horizon, if it's going up, if it's going down. And we've got a panel of experts today. To my right, one of our Real Men of Real Estate, Brian Fox. He's of Fox Real Estate Group out of Orange County. Welcome back, Brian.
Hello.
We have Tim MacBride. He is a real estate appraiser with MacBride Appraisals. He is joining us today. Welcome, Tim.
Good to be here.
And we have Patrick Kappel. Patrick Kappel is going to be giving us a lot of information. He's on the hot seat today. He is with Reef Point Realtors and Reef Point Investor Group, and he is an expert on the San Diego real estate market and also on real estate investing strategy. So welcome.
Thank you. Thank you for having me today.
Great to see you, Patrick. So we're going to dig right into this. First of all, I want to know a little bit about where you come from. Now, I do know that you are a U.S. Navy veteran.
That's right.
Having attended Annapolis, congratulations.
Thank you.
That's a school that would never talk to me. And you also are currently in the reserves, I believe.
That's right.
Still serving our country. So
Still
thank you
serving.
for that.
Yep.
I'm glad somebody is. I don't have to. Thank you. My dad was a Navy guy, and
good for
he actually talked me out of going into the Navy. No, to be truth with you. He was a Navy fighter pilot. Now, you also attended UCLA, got a master's degree there?
I did, MBA at UCLA.
MBA, and you got another master's degree at University of San Diego.
Master's of Science down here in real estate, a master's degree in real estate, University of San Diego.
So you have an IQ that is probably 10 times mine, which is fine. I do not feel intimidated whatsoever.
But you're the host.
I am the host. Yes. Welcome, Patrick. I actually met you when you were talking about the San Diego real estate market. I was fortunate enough to have been invited to one of the real estate investor groups here in San Diego, and you gave an amazing presentation on what San Diego real estate market looks like, and one of the few people out there that parrots my opinion that there doesn't look to be a dark cloud on the horizon, to be honest with you. I'm looking at a market that wants to spring forward and move up quickly. So give us a quick rundown of what's the status of the real estate market? Are we nearing a bubble? What's the scuttlebutt about? There's that downturn coming. What does that look like?
So Steve, when I talk about the real estate market, I kind of like to break it down and focus on two areas. One, the basic 101 economic supply and demand. And then two, what's going on in San Diego specifically. Before I get to those though, the word bubble, okay? I often hear people say we're in a bubble, prices are high, why should we buy now? And my first question is, who told you that? What makes you think that? Now, the answer is often, well, my coworker, my brother, my uncle who lives in Nebraska.
Or the famous, they say.
They say it. They say the news. Yeah. The first thing to understand is buyers don't create bubbles. Bubbles don't just happen. Bubbles are created, and bubbles are created by lending. Now, we look at the last bubble that we had, and lending was out of control. If you've seen The Big Short or read anything about the last recession, it was primarily due to the lending standards of the time.
Soft money, easy loans, those
adjustable
kind of things,
rate
right?
mortgages. How hard has it been to get a loan over the last decade?
It's been pretty grueling compared to what it was.
It's amazingly difficult to get a loan, has been. Starting to loosen up a little bit, but not quite much yet. Now, when we look at what causes bubbles, I don't think we're even near a bubble territory, not even close. It's just not going to happen in San Diego because of the two other things we're going to talk about. Supply and demand. When you go back to basics in economics and real estate, always fall back to supply and demand. Now, the analogy I like to use for real estate in San Diego is if I walk into Costco and I want to buy a bottle of water, it's probably 20 cents a bottle, maybe 30, because there's so many bottles of water. If I have a bottle of water and I'm in the middle of the Sahara Desert and I have enough to quench the thirst of 8 people, but there's 10 people around me, how much is that bottle of water going to cost?
It'll be a bidding war.
It'll be a bidding war, and it'll cost a lot more than what it's going to cost in Costco, Midwest, and many other markets. Now, San Diego is worse than that Sahara Desert scenario I just gave you. In San Diego, we're in the Sahara Desert, one bottle of water, 10 people around us, but there's a horde of people coming into San Diego. We are growing by about 30,000 people year over year. We house about 2.2 people per household. You do the math, we need about 13,000 units to be built every year in San Diego.
And how many units are being built?
Not even 10,000. Since the recession, we have not even broken 10,000 a year. We have so grossly underbuilt in San Diego since the recession that we now have a housing deficit of approximately 100,000 units.
And this is why we can't afford to live here.
This is why we can't afford to live here. There's back to supply and demand. We have a strong supply. but it's not even near what demand is. And the worst case scenario right now is we're not going to be able to meet that demand. We just can't build enough.
Yeah, I was at the big builders conference in Las Vegas, and the builders out there sitting in the policy forum were saying to them supply and demand is almost irrelevant because the demand's never been higher, but they don't have the land or the labor to build anything with.
Exactly.
So now, Brian, you're up in Orange County.
Yes.
And that's not too far from San Diego, but it seems like it's a little bit of a different world sometimes. How does that relate up in Orange County? Because South Orange County's got its own little boom going on, doesn't it?
Well, so this is actually the thing that I tell everybody is that it's actually really easy to understand. It's just basically human psychology. So the last bubble we had was not because of real estate. As you mentioned, it's because of lending. The bubble before that was because of savings and loan. The bubble before that was something totally unrelated to the real estate market, but we're a commodity. We're actually, I think the biggest GDP that we have is real estate itself. So we're a product. We're something that's traded and sold. So the reality is if money's not coming in, stuff doesn't get pushed to real estate. And as you mentioned, supply and demand. Now with that as well, the way that people, our market or most markets I see, I sell stuff in Northern California, the desert. We don't venture down to San Diego too much as we don't have the clients down here, but we're pretty wide. And it's significantly the same thing. It's not about price, it's about value. And this is the thing. When it comes to people making a decision on what they think, in an upward trending economy, everything is valuable. You mentioned that with water. In a market where there's not enough, everything has value. In a market where there is enough and there's no history of things going up anymore, value is very much dependent on how we see fair trade. And that's what's going on now. So all around Orange County, we've seen what they're calling a softening, but really is it's coming back to reality.
That's right.
And that's just, it's not a softening. It's just people only understand what they did 20 years ago. So when they see this market looking like the last market, they assume it's going to do what the last market did.
Okay, now Tim, so the values, are they coming down? Are they going up? You're appraising homes out there.
I am, and each location is different. And you talk about a softening, but that's compared to the frenzy that it was.
Exactly.
So if it's not a frenzy anymore, I don't know if that means it's a softening.
So
It's a regular.
but
it's not coming down, it's just not going up as much as it was, and that looks like it's going
It'll
down.
be interesting to see how the numbers pan out over the next six months to 12 months. But some of the marketing times have gone up a tick, maybe. But it's more than anything, it was so overheated in that we will see how it goes. But I don't see any kind of a big softening.
You're not
at this
appraising
time.
homes at 2/3 of the value they were a year ago.
No, it's a steady, healthy growth rate right now I see out there.
So it's not 2007. It might be 2001. All right, we're gonna talk more about this when we come back from the break. I want to get deeper into this. So when we come back, we're going to talk a little bit about some San Diego economic updates. Patrick's going to share with us about some of the things San Diego has going for it that are unique among the other major cities in the country. This is Real Men of Real Estate. We'll be right back.
Hey guys, how are you today?
Good.
I'm here to talk about how with technology you can make amazing worlds. Come with me. My team and I bring the Halo world to life.
Is that you?
That is me. I wasn't a math genius and I knew nothing about coding. But you guys do. You guys have the power to change things.
I want your job.
I want you to have my job.
Opioid dependence can happen after just 5 days. Know the truth, spread the truth.
Welcome back to Real Men of Real Estate. I'm your host, Steve Matley. Today I am joined by Brian Fox, one of our Real Men of Real Estate. Tim MacBride is an appraiser with MacBride Appraisal, and we have our special guest today, Patrick Kappel, who's been talking to us about the San Diego real estate economy and market and where it's going. And what I want to get into in this segment with you, Patrick, is you shared some unique information that I saw on what makes San Diego unique among the municipalities or the major cities that are around and even separate from the rest of California. And you talked about some of the industries, some of the mobility, people leaving, people coming in, birth rates, those type of things, and where we look like we're going in the next 20 years. Can you share some of that with us?
Sure. So I'll start out by making the quick statement that San Diego today is going to become in the future what San Francisco is today in home pricing. And in San Francisco, you can't buy a property unless you have $1 million all cash pretty much. So why is that? What made San Francisco what it is today? It's the silicon chip. It's the technology innovation that happened there. The silicon chip is yesterday. Today, it's biotech. And biotech's biggest footprint on the West Coast is San Diego. Through UTC and all the way down to Chula Vista, we are bringing in the biotech startups that are going to be the Fortune 500 companies of tomorrow here in San Diego. With that, we're bringing in the intelligence and the high earners that will ultimately raise real estate prices faster than what we've actually seen. Not only the biotech, but the military plays a huge impact here in the San Diego economy. In fact, the military is realigning its forces. It's called the Pacific Pivot, and we are pivoting our U.S. military to the San Diego region. Now, we've always been a rather large military city, and that's only going to grow from a little over 50 ships in the harbor to soon we'll have over 80 ships down in San Diego Harbor. They're building a $1 billion special forces training facility down in IB. And I talk biotech, I talk military, because those are some of the biggest driving sectors in our economy. But when you take a step back and you look at the full economy, it's important to note as well that no single segment of our San Diego economy makes up more than 16% of our total economy.
And that's huge because for many decades, San Diego was almost a single industry economy,
right.
and it rose and fell in major chunks. And now it's much more parity.
That's right. Having that diversity keeps us recession resilient, I like to say. We're not subjected to one industry having a bad downturn.
Right.
And that resilience is rarely seen throughout the United States in major cities.
And I'm aware because I work on NAFAC projects every once in a while as an outsource manager, and I do know there's a lot of big projects coming up. The Spay War project coming up, and I know there's some other large naval NAFAC projects that are planned for the San Diego area. So I understand what you're saying on that. Now, I'm curious where the next 20 years go. Well, when we get back up a little north of the border. So Pendleton sits between San Diego and Orange County, and it's a marine base, and it's really mostly accessed on the San Diego side, but there is activity on the other side of that base. If that's true, how does that affect South Orange County as well?
You know, I'll be telling you honestly, I don't think anyone in Orange County really thinks very much about San Diego. Other than visiting, they don't, and that Camp Pendleton really does divide us pretty good.
Right.
It's the Great Wall of China of nothing right there, and we don't venture from it. But in the reality is what's going on in Orange County, I can't comment on the future of Orange County. We are having a lot of, you say biotech's going that direction, we're seeing a lot of silicon come our direction. It's just, there's tons of industrial, there's tons of land all around the Irvine company, and a lot of it's going to major companies. I have seen a new commercial building built in like 30 days, the way they're putting those up. And so there's a lot of that coming in. It's similar, but we have higher prices because we currently have the demand. If what you're saying is true, then that demand will simply migrate to a different area because of what's going in. We have companies going in already because we have the demand.
And I've seen a lot of research park type stuff popping up around UC Irvine, that toll highway that goes up there between Capistrano and South Coast. And I see a lot of new construction in that area. I'm assuming a lot of that is the tech industry.
Yeah, and you know what's actually getting very popular where we are going into construction? It is single-use office space, like office suites. Those are major companies like WeWork, areas like that where they have these large, they'll just take these buildings, renovate them, and turn them into WeWork stations. And then people are starting their companies, they'll just go and rent small offices. There's a lot of those going on.
And those become startup hubs. Right?
They do, yeah.
Tim, what are you seeing as you go around? You're appraising homes all over North County, San Diego. What are you seeing out there?
Well, I see, speaking of the biotech, it's a lot of people moving here or moving up from where they were, but just the high income jobs are fueling some of the market you were talking about there. There's just the increase in high income jobs is the opportunity to keep purchasing the even though the prices as they are, there's the jobs that are here. I see people that have the ability to purchase the houses at the prices that they are.
Yeah, and I see that the trend is obviously North San Diego City, UTC's UCSD area, Cimarron Valley, a lot of tech. But Carlsbad has a lot of tech companies going into it. I'm watching what they're building up here in the extreme north of San Diego County. And I'm also looking at the traffic patterns of people living in the South Bay that are driving up. It's a reverse commute now. Where it used to be people lived in the north and went to work in the south. People live in the south, they're coming up to work in the north because you have a lot of the people working at these tech companies. I used to always say that there's the thinkers and the tinkers. There's the engineers that design the things and they write the code, and there's the people that actually build and create things that come out of it. And a lot of them are coming out of the South Bay area, and so there's that housing down there. The South Bay is not excluded from this tech bubble, even though most of it's going in to the North County.
Well, and the other huge thing happening in South Bay, one of the biggest developments in San Diego, is the Chula Vista Bayfront development. That is the biggest bayfront development happening on the West Coast, and it's happening just south of us right now. So another great area to invest in, down in Chula Vista, near the biotech areas. And really, I don't think you could throw a coin and go wrong wherever it hits in San Diego investing.
So between that and the Imperial Beach Naval Facility going in, that's a lot of new jobs coming in. And you mentioned, Tim, that the higher income people. So we hear a lot about people moving out of California, out of San Diego, and less people are moving in. But the truth is, who's moving out and who's moving in?
That's a great question. So the majority of folks, there was an article came out right before Christmas this last year, and the majority of folks moving out are some of the lower educated, lower income earners.
So high school degrees.
High school degree, that's about it.
Okay.
Obviously, there's your one-offs that are moving out as well. There's always the exception. But the average of those moving in, it's something for every 4 that move out with a high school degree, 1 is moving in with a master's degree. And that goes back to what you were mentioning with the highly educated workforce coming in, making the high earnings. What happens to real estate when that happens? It goes up, just like it did in San Francisco. And we have also shifted. A major shift happened in 2007, and it did not even make the news. But historically, San Diego's growth has been due to net migration in. In 2007, we still have folks moving in, but it shifted to a growth rate the majority of it due to birth rate. So we are organically growing our city now instead of pulling people in. When you have a city that all of a sudden is what you could call self-sustaining, organic growth due to the birth rate, you have a train without brakes, and that's going to be the growth of San Diego.
And that's going to affect the entire county, obviously.
The entire county.
People with children don't necessarily want to live in a 1 or 2 bedroom urban apartment. They probably want to live in Santee or Poway or Escondido or Valley Center or someplace where they can have a house and a yard.
That's right. That's right. I always like to say, too, if you draw a straight line, you mentioned Orange County, they have a lot of tech moving in there. If you draw a straight line down the west coast of California from San Francisco to San Diego is the most affordable real estate on the southern west coast of California. And with that said, people say, well, it's so expensive. It's all relative, folks. Everything's expensive to the year 1850. And San Diego is cheap compared to everything else up and down the west coast. And I say, don't invest in the past. Don't invest in the present, invest in the future. And when you want to invest, don't look at necessarily what's happening today. Got it, get it, invest it, look at today, but look at what's happening in the future. And when you look at the future of San Diego, the economic and our growth and the high wage earners moving in, along with the physical constraints of Camp Pendleton, the mountains, Tijuana, and the ocean, and the government restraints of building here, we are just a pressure cooker of real estate that's only going to go up in price.
And where I see that also is, you mentioned that Orange County doesn't really think much about San Diego unless they come down here to party.
Totally.
Now you know.
When you go up, that's up to 5. When you go up to 15, it's a different story.
Yeah.
You're the same distance away, but a lot of those people work here in San Diego. They live there because they can't afford to have the house. Up there, they can have the house in the yard instead of living in an apartment in the city here. And what I see is a big push going up that direction, which is why my company is heavily investing in Riverside County in the R1 and the entry-level home markets, because that's where a lot of that pressure is coming up because of the growth you're talking about. We need to go to a break. When we come back, we're going to wrap up our discussion on the real estate economy, the San Diego market, with our panel. I'm Steve Matley, your host today for Real Men of Real Estate. We'll be right back.
Put the keys down, Kevin.
But I'm gonna drive home.
There are several warning signs present that you shouldn't be driving.
My text to emoji ratio has gotten a little out of hand.
A little?
Yep, I'm definitely gonna call a ride home.
First time I tried biking, and it was laying around my mom's house. I didn't know they'd be this addictive. I didn't know how far I'd go to get more.
Opioid dependence can happen after just 5 days. Know the truth, spread the truth.
Welcome back to Real Men of Real Real Estate. I'm your host, Steve Matley. Today we have our panel of experts, Brian Fox, one of our real men of real estate with Fox Real Estate Group. We have Tim MacBride, he is an appraiser. And we have Patrick Kappel. He is a realtor, but he's also an expert on the San Diego economy and on investment strategy. So we've been talking today about where our real estate market economy seems to be going and what makes San Diego unique and different from a lot of other areas and really sustainable in the case of a downturn. Why don't we just go around the table and put in some final thoughts, anything you want to throw in about where we are, where we're going, and what you see out there in the market. Brian, go ahead.
Yeah, so kind of a global concept is that I think most people are ultimately concerned not repeating the past. You know, a lot of people came out of some really bad situations. They lost a lot of money. They were betting on what they heard as being great. Well, the only thing they can do to stop themselves from making the same mistake twice is now listen to the bad advice and say, this has to be true, because if it's not, and I'm wrong again, I don't know if I can recover from that twice.
Yes, and I do hear that from people.
Absolutely.
And when I tell them, you don't have to, because we're not in the past right now.
Well, you know, what's interesting too is that I've gone to other places around the country, and where their market had not yet boomed, there was no sense of urgency. Why? Rent, it's fine. I'm not going to lose my money. As soon as that market starts shifting, that's when people start doing it different. Because they say, okay, it's safe because it's going like this. And when it stops going like this, they assume, okay, this means we're at the top and we're going to go down again. Because that's all they've seen in the last 20 years.
Right. Okay. And we're not, again, we're not 20 years ago. We're
exactly.
at a different time. Tim?
Well, as one on the ground, I'm actually, you know, in talking to the people face to face, and people, one big thing is people just want to be here. This is a place where people just want to be,
not
and
a bad
they're
place
going
to
do what they can to be here, and it's across the board. The number of people I know that we talked about, they do leave sometimes, but for the most part, the ones, there's way more coming in than going out, and it's just a place that you want to find a way to make it work to be here and raise a family here, live here, retire here. It's kind of across the board. Be young here. It's across the board as far as what I see. People that just really want to be here and will make a way. Find a way to make that happen.
Yeah, and I talk to people from the Midwest and the East, and they wonder, why do you stay in California? It's so expensive. There's taxes, regulations. Like, if you lived in San Diego, you'd understand.
Right.
And that's where you came from, Patrick, was that area. So
Dakota.
You're here now, and it's much more expensive. There must be a reason.
You know, like many people, I came on a family vacation here when I was 16, and I said that's where I have to live, so I joined the Navy, and that brought me out here. When I look at real estate, though, a lot of people ask me, Patrick, what do you think about the market? How do you feel about the market? And I always give them the same answer. Now, a lot of people say, well, I think it's high, I feel it's overpriced, or I think it's low. I always say it doesn't matter what I think, and it doesn't matter what I feel. It matters what the data shows us. Because the market doesn't care about my feelings or my thoughts. The data is what one must look at to make informed decisions. And today, the data is pointing at a growing market in San Diego going on into perpetuity in the market of San Diego.
And I agree with that. And so the key is, when people are trepidatious about getting into a real estate market at any point in time, it's because of fear of the unknown. And fear is a horrible emotion to base your decisions on.
That's right.
The way to fight fear is knowledge. Inform yourself. Learn from the people, and not turn on the TV and listen to the bad news prophets who need to keep you tuned in. Listen to the people on the front lines, like who we have here, the builders and the realtors and the developers and the people out there in the trenches every day, and you will get real information on what's really going on, and you'll find it's quite optimistic, is what I hear. You know, I see all around it, people are gearing up for a big upturn. Well, we're about out of time here. I want to thank our panel today. I want to thank Brian Fox, one of our real men of real estate, Fox Real Estate Group out of Orange County. Tim MacBride, thank you for joining us with MacBride Appraisals. And, of course, our special guest today, Patrick Kappel with Reef Point Real Estate and the Reef Point Investors Club. Thank you for all your insight today. We're going to be back next week with another fascinating episode. We're looking forward to see you there. I'm Steve Matley, your host. We'll see you next time.